Okay, let's talk BigBear.ai. Is this AI bear finally waking up from hibernation, or is it maybe just a sugar rush from a massive government contract? We're about to dive into that paradox. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we're doing a deep dive into BigBear.ai, that's ticker BBAI. And we're using our research captured just now, September 24, 2025. And, this isn't happening in a vacuum. The macro environment is actually pretty supportive. The OECD just upgraded the U.S. growth forecast for 2025, specifically calling out AI investment. So that's a nice tailwind.
Definitely a tailwind. And BBAI itself, well, its core mission is interesting. They do what they call high-stakes decision intelligence.
High-stakes decision intelligence. What does that mean, really?
Yep. It basically means they provide predictive, mission-critical AI tools.
Yeah.
Think clients like U.S. defense agencies, the intelligence community. Very serious stuff.
Right, serious clients.
And that whole story got a huge boost recently. They announced a new collaboration with the U.S. Navy for maritime security. That's a massive vote of confidence.
Okay, that sounds impressive. Big Navy contract, high-tech AI.
Yeah.
That makes headlines. But here's where it gets tricky, right? There's this huge financial conflict.
Exactly. You've got these impressive contracts, these big-name clients.
But the actual foundation, the fundamentals, they look, highly speculative. Can you maybe explain for listeners what a negative fair value actually signals? Because that sounds bad.
It signals an extreme disconnect. Our fair value models, based on cash flow and earnings, they're suggesting a really shocking range, somewhere between -$2 and -$8 per share.
-$8?
Yeah.
Wow.
A negative value like that basically means that right now, with their current cost structure, maybe debt load, or just the sheer cash burn needed for these big government deals, the company is actually destroying value.
So the current operations are losing money, essentially.
In terms of intrinsic value based on current financials, yes. The fact that the stock is trading around $8 right now, well, that price is purely based on the promise of future growth and profitability, not today's reality.
That's a huge gap, a massive disconnect between story and the balance sheet. And it makes sense then why Wall Street analysts seem so torn. We're seeing, one strong buy, one buy, one hold?
Exactly. It perfectly reflects that battle, story versus numbers.
Mm-hmm.
And you see this tension playing out in the trading sentiment, too. It's like a civil war, almost.
A civil war? How so?
Well, look at the options market first. The bull camp. Overwhelmingly optimistic. The put-to-call ratio is tiny, just 0.14.
0.14. So that means, 7 bullish bets for every bearish one?
Roughly, yeah. It suggests options traders are betting very heavily on more upside, maybe thinking the downside risk is minimal.
Okay, so extreme optimism in options. But then you look at the short sellers.
Right, the bear camp, the shorts, they're dug in deep. A huge 19.88% of the available shares are being shorted right now, almost 20%.
Wow, nearly a fifth of the float is betting against it. So you've got massive hope in options and massive pessimism from short sellers.
Exactly. That combination, high short interest plus that really extreme bullishness in options, it creates this financial pressure cooker. It means the stock isn't just volatile, it's potentially explosive. Could lead to a big short squeeze or, the opposite if things go wrong.
Okay, so the sentiment is completely split. What about the technicals? Where's the actual money flowing according to the charts?
Right. Psychology is one thing, but price action tells a story. And technically, we're seeing what you might call a trifecta.
A trifecta. Okay, break that down.
First, the trend. It's decisively upward. Trading in clear skies. Looks like a rocket launch, honestly.
Okay, strong uptrend. What's second?
Second is volume. We're seeing significant accumulation. Big buyers are stepping in, which confirms there's real conviction behind this move. It's not just retail hype.
Right. Trend up, volume confirms. But there's always a but, isn't there? Is it maybe flying too high, too fast?
That's the third piece, the warning sign. Our momentum gauge, it is flashing overbought.
Overbought. Okay, so the conviction is there, the trend is there, but it might be stretched in the short term. Needs to cool off a bit.
Precisely. It suggests that, while the move seems real, a pause or maybe a pullback could be coming soon. It might need to consolidate those gains.
So putting all that together, the strong story, the Navy news, the positive macro backdrop, but also the terrible fundamentals and the overbought condition. What's the strategic outlook?
We're leaning cautiously bullish. Essentially, the technical breakout, that macro tailwind you mentioned, and the Navy news seems strong enough to, outweigh the weak fundamentals, at least for now. in the short term.
So more of a momentum play than a value investment right now.
Absolutely. It's riding the wave.
Okay, so if you're playing that momentum wave, what are the key levels to watch? Where's the battleground?
The big one is right around $8. That seems to be the line in the sand, especially with all that options activity. If the bulls can hold $8,
Then the next target might be.
the next upside target looks like $8.48. That's the next resistance level to watch.
But crucially, in a stock like this, priced mostly on hope, you absolutely need to know where the exit is if things turn south. What's the invalidation level? Where does the bullish idea break down?
For us, the critical level is a close below $6.50. If it breaks and closes below that, the whole bullish technical picture starts to fall apart.
And with almost 20% of the float short, breaking $6.50 could get ugly fast.
It could trigger more selling, absolutely. So yeah, we treat that $6.50 not just as a suggestion, but as a pretty firm line, a lifeline, really.
Got it. So the trend is your friend for now, but know your exit. It's a high-stakes momentum game here. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.